Today, I want to talk about a stock many people struggle to describe without sounding emotional. Reddit, RDDT. It can look irrational, it can move violently, and it often forces investors to confront a harder question than good quarter or bad quarter. As of the regular session close on February 6, 2026, U.S. time, RDDT closed at $139.83. Since earnings, the stock has gone through a clear repricing phase. The full write-up is in the first line of the description and in the pinned comment. Based on the company's disclosures, Reddit reported Q4 and full year 2025 results and authorized a $1 billion share repurchase. The widely discussed takeaways include: advertising remains the core revenue engine, and the growth has been strong. Forward guidance for next quarter revenue came in above broad expectations. Management emphasized the role of AI on the advertising side, lowering advertiser friction, improving campaign efficiency, and automating creative and optimization workflows. If you only look at these headlines, the stock should go up. Yet markets often compress the multiple right after seemingly positive news. In other words, earnings aren't the finish line. Earnings are a spotlight, exposing the future tension points earlier than most people are prepared to see. Debate 1. Can growth quality hold, not just growth speed? Reddit's moat is built on something rare: authentic human conversation. But as the platform scales, structural tension is inevitable. Does the experience become more feed-driven, shifting from high-intent discussion to low-intent scrolling? If ad load rises too quickly, does it compromise long-term retention and community health? International expansion may accelerate, but can international monetization quality and ARPU structure keep pace? Debate 2. Can the advertising tailwind survive a cycle shift? Strong growth does not guarantee the multiple holds. When advertising is strong, product improvements and budget expansion can reinforce each other. But advertising is also highly exposed to macro sentiment and budget discipline. The real concern is whether ad momentum can sustain the same incremental efficiency gains if budgets turn cautious. AI is changing how people discover information: search, summaries, conversational interfaces, and distribution pathways. RDDT sits right at that intersection, which is why its price action can be more sensitive. My goal is to turn news and market emotion into a decision-grade map. This is not day-to-day hype, and it's not a single-point prediction. My approach is closer to scenario planning: bull, base, bear paths. More importantly, I put risk boundaries first. The most valuable skill is not being right. It's knowing when you're wrong and stopping the internal storytelling before it becomes expensive. Headlines tell you what happened. Investors struggle with what comes next, what to watch, what to ignore, and under what conditions you should stop self-justifying. You don't build that from scrolling news. You build it through a repeatable framework and disciplined postmortems. Question 1. What do you think is driving RDDT right now? Fundamentals, flow positioning, or narrative? Question 2. Is AI-driven ad automation a durable advantage, or a feature competitors can replicate quickly? Question 3. In an AI-saturated internet, does authentic human conversation become more valuable data, or does new distribution dilute its power? Once again, please consider subscribing. I'm looking forward to sharing more with you. Thank you, and I'll see you in the next episode. Disclaimer: this is for research and discussion only, not financial advice.